Welcome, everybody. Steven Sitkowski here. Glad to have you. Welcome to this edition of Market Insights, where we take a look at what's going on in the financial markets. We had a week off last week with Memorial Day. I hope you celebrated appropriately with thanks and appreciation. Quick reminder that everything that we do here is for educational and informational purposes only. It is not intended as investment advice. So what to watch this week? Kind of a slow news week. Today we've got manufacturing PMI that'll be coming out, along with construction spending, not exactly market movers. Tuesday, we will get the job openings number. These are available jobs known as the JOLTS report. Expected to come in at 8.3 million available jobs. Then on Wednesday, ADP employment number of jobs being added. And then the ISM services number will come out. Initial jobless claims, we have that every Thursday morning. And then Friday, we get the unemployment rate, which is currently at 3.9%, expected to stay at 3.9%. And hourly wages are forecasted to move up 0.3% year over year. Last week's heat map, not a lot of shining stars. T-Mobile did great. AT&T did great. Apple up 2%. Lilly, another good week. Target up. AbbVie, of course, NVIDIA, need I say it, up 6.54%. They've announced a new chip design, actually a new suite of products that should be market mover for them, certainly has been. And they've got their stock split that'll happen on June the 10th. It's a 10-for-1 split. 1 year heat map, big winners. Lilly at 88%, Costco 63%, Meta 74%, Alphabet 40%, Amazon 44%. Look at the laggard in Apple. Surprising. NVIDIA 185, Broadcom 68, AMD 40%, Qualcomm almost 80%. Market breadth, looking at the number of new highs versus new lows. First on the New York Stock Exchange, that's 227 to 118, decidedly bullish. And on the NASDAQ, 247 to 299, not quite as impressive. So keeping score, year to date, S&P is up 11.2, NASDAQ is up 13.3. That's pretty strong. Dow 2.5, Russell 2.8. U.S. Treasuries 0.6. Oil is up. Bitcoin way up. So the big five definitely rule. This is Amazon, Apple, Microsoft, Google, and NVIDIA. They're up 27%. Year to date, the S&P at 11, and the other 495 companies, when you pull out these five, are only up 6%. But we are seeing a bit of a broadening when it comes to companies that are contributing to higher prices. You know, if you look over here, you know, we see the Magnificent Seven. They represented about 60% of the gains. Now it's, 45-ish %. China buying up gold. Probably one of the reasons why gold is at an all-time high. M2 moving a little higher. And you've got an M2 as our money supply. Well, you've got a lot of money in circulation. It's good for the economy. It is good for the stock market. So very little pain. Largest intraday market pullbacks this year, 5.6%. What'd this market do if we saw a 10% decline? Everybody'd be freaking out. Last year, we did have a 10% drop. Year before that, 25% drop. So this is an unusual year. And you know that we haven't seen a single day where the market has fallen more than 2%. We got some days where it's up more than 2%, none where it's down more than 2%. Here's the NVIDIA split on June 10th. It has just been rocking. We now have $6 trillion in money market funds. So when and if the Fed cuts rates and rates across the board start coming down, well, then what's going to happen to this money that's in the money market fund? Some of that is going to migrate into stocks. During election years, market loves the summertime, right? I mean, it would make sense. The administration is going to be doing everything they can to make the economy look as good as it can, which, the short response, they're going to be out there spending money like crazy, as if they haven't been right along. And the latest on Fed probabilities for a rate cut, basically no chance in June, very little chance in July. We're now to 66% probability in September. That is definitely going to be data driven. They'll be looking at CPI, PCE, GDP, all the rest of the alphabet, unemployment rates. So that's really what's going to determine if it'll happen in September. Seems unlikely. November, now almost 100% chance of a rate cut. Take a look at the charts. All right, here's the SPX. It's the S&P 500. And we've got kind of a rolling top here. We've rebounded off of that. Remember me talking to you last week about, will that 50-day moving average hold? That's what's going to be key. And it held right here. Look at the low for the day. Touched it, and then it moved up. So hopefully we can resume that bullish movement. Let's check out the cues. Very similar. What about IWM, the Russell 2000? Had a nice bounce off of the 50-day, but now it's challenging that 50-day once again. So all in all, markets are in pretty good shape, still waiting on the Fed to do its thing. And, it'll probably be later this year before we see that rate cut. All right. Well, thanks for joining me. I will see you again next week. Until then, be blessed. Be safe. Bye for now.